The euro has fallen to its lowest level against the dollar in 2 weeks, even though European Union leaders reached an agreement on how to deal with future debt crises. The shared currency is down more than 11% in the past 6 weeks. Joining me now to talk about this is Axel Merk, president of Merk Investments. He oversees $500 million in currencies focused on assets. You do like the euro, though, and I want to ask you what you think about the current situation, Axel.
Well, sure. I think we have to put it into context with how it is not like in the U.S. In the U.S., we had a crisis, and we dumped trillions of dollars to fix it. In Europe, you drag your feet, and it happens very slowly. Now, both of these extremes are not very healthy. In the U.S., we've lost our sense of urgency. In the Eurozone, while the market may do what politicians are not doing. The good news in Europe is that the sense of urgency is prevailing. They're taking their time. Now, of course, I'd like them to move faster, but the Germans have every reason in the world to say, hey, wait a second, we're not just going to write a blank check. And the other guys have every right to say, hey, give us all the money we can. So it's a dialogue. The good news is that they're talking. Of course, we would like them to talk faster, but we believe the euro will strengthen in this environment simply because they're not spending and printing as much money, where at the same time the European Central Bank keeps things afloat. But yes, we would like things to move a little bit faster.
You mentioned the Germans. I'm not sure if you saw, but Stern magazine had a survey where most of the people they asked, I think 99% in Germany, wanted to go back to the Deutschmark. Is it possible that the euro breaks up?
I don't think so. And I've gone through that argument both for the weaker and the stronger countries. The problem is that if you were to pull the Eurozone apart, you would have an implosion of the banking system because the money would be pulled out of the weaker areas, go to the stronger ones. And even for a country like Germany, say they were to leave their bonds euro-denominated, that's akin on a partial default because the euro would obviously depreciate quite strongly in that process. Delineating which euros are new Deutschmarks and euros is almost impossible. So short of a collapse in the Eurozone, I don't think it's going to happen. And there, the political will is well strong enough. Now, at the same time, of course, they do have to get their act together and start moving a bit faster on some of their reforms.
But, Axel, you know, they're a democracy, too. I mean, how does Angela Merkel deal with it if the entire country doesn't want to use the euro?
Well, think about it. When the trillion-dollar backstop was introduced, the Social Democrats, the opposition party, they didn't vote against it. They abstained. Now, in the meantime, the crisis has been dragging on, and the opposition is trying to get some political capital from that. But if you hear what they say, they want to give a blanket check to the rest of the Eurozone. So we're not talking about one party saying we're leaving and the other one we're staying. They have just different views on how to proceed. It's a political process. It's a very ugly process. But as long as nothing is happening, less money is spent and printed, and as long as things don't fall apart, that should be a very good news for the euro. Think about it. The euro is at 132, 133 or so right now, or 131, versus 118 in the springtime, whereas you can argue that some of the crisis has worsened. The market is getting used to that and pricing the problems into the bond spreads where they're supposed to be priced. Germany is doing great in this environment. If Germany was outside of the euro, well, that would be detrimental to German exports. So there's a lot of talk. Not enough is happening, but overall, we're getting through this, and the euro will strengthen as it climbs this wall of worries.
I want to move southeast real quickly, Axel, and talk a little about China. The last time we spoke, you were bullish on Chinese assets. Let me just play a shot from Jim Chanos yesterday, who's obviously warning of a real estate bubble there.
When you actually look at the individual property developers and some of the other companies, they all look very interesting from a short seller's perspective. Often the profits are not in cash. They're getting more and more levered. They're demanding more and more cash from Western investors for their development. There's a lot of affiliate transactions that don't seem to make sense to us. So I think the Western investor is the one who's going to end up holding the real estate bag here.
And we are seeing, Axel, more and more of these ghost towns building so much real estate that nobody can live in it. What do you think about that?
Sure. To clarify, I'm bullish on the Chinese yuan, on the currency, not necessarily on the assets within China. There's a difference in that. Similar in the Eurozone, there's a difference between bullish on growth versus bullish on the currency.
Of course.
And what we see is in China, negative real interest rates are pushing people to chase hot assets, be that real estate, be that precious metals in China. And the government is keenly aware of that. And they're struggling how to deal with it. Traditionally, they're using administrative measures. measures to try to contain inflation. But what they have to do, they have to allow the currency to strengthen. That's the most effective way to, and in addition to that, raising interest rates, the most effective way to counter those trends. We believe the Chinese will do that. They're taking all the right steps in that direction. At the same time, they'll be very concerned that it's going to impact growth, and so they may allow the currency to strengthen while at the same time give another stimulus program, as paradoxically as that may sound.
All right. Hey, Axel, always a pleasure spending some time with you. Thanks so much for taking time out of your day. Axel Merk there, president of Merk Investments.